Hello, everyone, and welcome to another episode of Tax Sales Starters. I'm Carlton Hoskins, and today I have with me Brian Sidesticker. As always, he brings the most insight into tax deed and tax lien investing. Some of you out there may have some experience. You may already know a little bit about tax lien investing, or you may know a whole bunch about tax deed investing. What we want to do is talk about some of the scenarios that you might find yourself in when you're doing tax liens and tax deeds. And we want to answer some of those questions. And Brian's team has been fielding these questions for months. So we want to bring these questions to you all. Here's a scenario. I go to the tax auction. I buy a lien. The lien has 3 years to redeem. Next year, there's going to be property taxes due because I just paid the past due property taxes to acquire the lien. Who continues to pay the property taxes? The homeowner? And if they don't, what do I do, and why or why should I do it?
Yeah, and that term, I guess, terminology we use is subsequent taxes, right? And who's responsible for it. Ultimately, it's almost all. I guess I can't think of a state where it's not. I always like to caveat things, but it's always the property owner, right? You own the lien, but that doesn't mean you own the property yet. So it's the property owner's responsibility to pay their taxes always. That's number one. But the chances are, if they didn't pay their taxes last year and they don't pay them this year, right? Okay, whose responsibility is that? Technically, it's not your responsibility, right? But in an ideal world, you if you have the right, and not every state allows you the option to buy those subsequent taxes, but if you have that option, as long as you're not in over your head, dollar wise versus property value wise, it always makes sense to buy those subsequent taxes. Typically, you get a higher interest or whatever the statute interest rate is on those subsequent taxes. And it also keeps other liens as being superior to yours or subsequent to yours, again, depending on the state. I think actually New Jersey is one where the latest lien has priority. So just because yours is the oldest doesn't mean it has priority. If you don't pay the subsequent taxes, then you lose that priority to somebody else. Now, Florida is one where they don't even give you that option to buy those subsequent taxes. They're going to go to auction. You may have multiple lien holders on that property. It just is what it is at that point in time. But if you have the option to purchase the subsequent taxes, 9 out of 10 times, it always makes sense to do so.
Don't forget to hit the subscribe button, hit the alert bell so you can keep up with the latest posts and updates from Tax Sale Resources here at Tax Sale Starters.